Hey guys, yeah. So my name is Dhrumil. I'm a senior engineer at Ranger Finance right now, and I've been on Solana for a long time now. And today I'll be talking about the evolution of market microstructure on Solana. So to simply start, I'll actually take an hypothetical analogy so that all of us are able to understand in a very simple way. Yeah. So let's consider a very hypothetical scarce commodity like gold, right? Like vibranium. So you can consider that vibranium's most demand and supply is in the United States. So a lot of traders in the US are looking to trade vibranium, which means that US is the primary market for trading vibranium, right? And since US is the primary market, most of the traders at any given point, if you want to know what's the price for vibranium at any given time, what you should do is you just check up what's the price in the US markets, and you should be able to come up with a price that's for the vibranium, right? And let's just say that vibranium markets are heating up in India, right? People in India want to buy vibranium, they want to trade, they want to speculate, and that's why there are mini markets that are opening up called secondary markets, where traders and shopkeepers can come in. So these secondary markets are places where shopkeepers can open shops, they can buy and sell vibranium from who the customer is, and that way people can speculate from a different kind of market, which is called a secondary market, right? Now the big question is, how do shopkeepers in India come up with the price for vibranium, right? Like, for example, if you are a shopkeeper who wants to buy and sell vibranium, how would you price vibranium? The simple answer is having the information bridge from primary markets. So what you would do is you would have your associates in the US who would relay pricing information to you. Whenever the price changes, these guys will make phone calls to you, and it will tell you what the real-time price for vibranium is, right? And one important note to understand, like the final analogy, is that the faster and more efficient the channel is, the better for you as a shopkeeper, because the faster you receive information about the price changes, the better you will be able to competitively quote vibranium in the market, and more volume you will be able to serve. So now let's take a step back from this analogy and compare how this relates to our financial markets on Solana. So the vibranium that I talked about is actually crypto assets called Bitcoin, Ethereum, Sol, or it could be any asset. And the primary market, which was like the US for vibranium, is actually the centralized exchanges called Binance, Coinbase, where most of the volume is there and the natural price discovery happens. The secondary market, like the one that we saw in example was India, is actually the decentralized exchanges, the venues like Jupiter, Titan, and the venues that you use with your self-custodial wallets. These are the secondary markets. And the shopkeepers who actually serve the traders on these secondary markets are the market makers. Now for these market makers, the most important thing, turns out, is the information bridge that we talked about, which is the Oracle update transactions. So every time you're a shopkeeper on Solana and you want to serve volume, you need to make sure that the information bridge you have is as efficient as possible. Okay, so given this analogy, let's look at like how the markets have evolved, because it wasn't like these markets are the way they are today forever. They've evolved slowly and steadily in different phases. So the first phase was in early 2020 when Uniswap v2 launched on Ethereum. You can think of Uniswap v2 as an AMM, which is basically a shopkeeper who does not have any information bridge or a phone, right? The shopkeeper does not know any pricing information. They are just relying on their mathematical knowledge to give you a simple example. If I am a Uniswap v2 shopkeeper, what I'll do is I'll just ensure that if I'm selling a vibranium for 1,000 rupees, I'll buy it for a little smaller amount so that I can make the difference as my profits, right? And you can see that this is very inefficient because the actual price discovery is in the primary market, and it's just that the secondary market needs to keep up with that. So Uniswap v2 is actually quite inefficient in that way. The next phase involves the obvious solution is to plug in the information bridge, which is like include Oracle-based AMMs, right? So oracles are basically the way you send off-chain information to the blockchain so that the blockchain knows what's happening outside. right? So you can think of this as a shopkeeper with a satellite phone, right? And this is about Ethereum, right? So Dodo actually started in 2020, which was like an Oracle-based AMM, and since it was built on Ethereum, but the problem is like Ethereum's transactions work like satellite phones. They are quite expensive, they are very slow, and that's why they're still better than the shopkeepers with no phones at all, but they are still like suboptimal, not the best. Then there was this phase 3, which is Uniswap V3 in 2021. And Uniswap V3, what they did is like, you can consider that as a shopkeeper with more advanced inventory control, right? The problem still is that the information bridge is missing. That's why, which brings us to phase 4, which is like the recent prop AMM revolution that is happening on Solana. So you can consider that as a shopkeeper with very advanced mobile phones and very advanced communication channels to bridge information from the off-chain world to the on-chain. And you can see that like this is data from like last September to the current. You can see that the yellow one is like the market volume share of these prop AMMs on the Jupyter aggregator where most of the Solana trading is happening. You can see like the activity is spiking up, and now this is for like the Sol USDC pair. So you can see most of the prop AMMs are covering up to 75% of volume share, and the rise is quite meteoric, right? And the cost for operating the economics for the prop AMMs is quite high. So just to compare like one pair like Sol USDC, you have to make like a lot of Oracle transactions so that the real-time information of the prices on the centralized exchange is updated. And just if you look at the data, like the average cost for one pool is around $1,500 per day. So it means that like these models are quite efficient, but like they're good for the short term because they relay pricing information on the blockchain and the traders can benefit from it. But it's still very expensive because it takes like 5-6 figures of yearly costs for just one pair. And lastly, which is the faster block times, of course, so that you can give more pricing information in a high frequency manner. And when prop AMMs do not work, so in the cases where like the volumes are quite low, right? Like for example, you saw like I take 6 figures of investment to make like one prop AMM, but if the volumes are low, I don't receive any commission, which is like quite problematic. So this business does not make sense. And for markets that are like primary markets are on chain, right? Like so there's no information that needs to be bridged from centralized exchanges like Binance. This model does not make sense. The future of AMMs, prop AMMs, is like I'm quite bullish on the short term because I think like the price discovery is still off chain for a long time now. It's going to be that way for at least like a few cycles, but in the long term I'm bearish because I think it like creates markets very opaquely and like there's no transparency in the liquidity depth, which is not how the Nasdaq or like the National Stock Exchange kind of like those exchanges work. And you can see like this idea of like the microstructure is similar to Robinhood, wherein like there's like one venue where all the trading happens and these venues directly connected with the private market makers, and there's just like payment for order flow. Yeah. And which brings me to the last question, which is like the last point, which is the Nasdaq of blockchain is still something that is missing and it is still an unsolved problem. So all of this, if this is interesting to you, you can connect with me on Twitter and we can chat about it. We are also hiring senior engineers at Rust, at Ranger Finance. So feel free to connect with me, and thank you.